It is a big week for markets. We're talking about trade with China, the election results in Argentina, and how it's affecting markets and third quarter earnings this week. For more on this, we're going to bring in Art Hogan, Chief Market Strategist at B. Riley Wealth Management. It's great to have you. Thanks for taking the time.
Thanks so much for having me.
Lots to talk about. Let's start with what we're seeing in the U.S. today in terms of the markets just kind of surging. What do you think the main reason there is? Is that the talks between U.S. and China potentially starting back up?
Yeah, interestingly, this is almost the exact polar opposite of the move that we saw when things started getting disturbingly hostile between the U.S. and China in terms of trade. So the fact that we're able to claw that back basically is the exact opposite move that we saw a week and a half ago when this thing started to sort of get much more on the rocky side of things. And I think the biggest impediment right now to markets and the focus of markets is the inability to accomplish important trade deals with our most important trade partners, China being one of them, but I would argue Canada probably the most important. So when investors focus on trade and tariff, it's not a positive, and it's more of a headwind. But when investors can feel a bit better about direction of trade negotiations, then they focus on things like earnings, which is a much more positive tailwind because the earnings season thus far has been much better than anticipated.
Yeah, I do want to talk about earnings as well. But just on that last note that you just mentioned, does that mean the idea that maybe Canada and the U.S. will not be having trade talks anytime soon, is that going to affect the markets moving forward, do you think?
Yeah. I think that's probably one of the largest of the impediments for markets. And I think that's when we think about our most important trade partners, Canada sits there at the top of the list. Mexico certainly falls in the top three. And then it's China. Clearly, thinking about China and the U.S. and the larger setting is obviously it's very important. But the import-export markets with Canada is one of the most trade partners we've ever had and need to continue to have that. And obviously, that relationship sort of came off the rails last week. So it's good that we're moving forward with China, but we certainly need to move much more rapidly to get in a better place with both Canada and Mexico, whether it's on a bilateral or trilateral basis. That needs to happen rapidly, and this market won't get much more traction unless and until we get there.
Okay, so as promised, let's move on and talk about earnings. We got a big week ahead. 5 of the Mag 7 companies are going to be reporting this week. What are you watching for?
Well, I'll tell you this. What's been interesting is that not just the fact that 83% of companies are beating on the top line and 81% on the bottom line, which is significantly higher than the average, where you're seeing 53% of companies actually take their guidance up for the fourth quarter, which is well above the 33% average that we see. So that's important. We've started the season off well. But the interesting thing is that coming into earnings reporting season at or near all-time highs makes the reaction function very difficult for companies. So even if you check all the boxes, you have great earnings, you have great revenues, you take your guidance up, but you're trading at all-time high, the reaction function hasn't really rewarded you. Where I think we start to see the rewards are in that non-Mag 7 type group that's not trading at all-time highs. We started to see that in some of the consumer staples last week. We'll likely see that in the other sectors that are not outperforming the S&P. You have a better chance of being rewarded for an earnings surprise if you're not trading at an all-time high when you report.
Okay, so with that in mind, with these earnings reports coming out this week, is there a certain sector that you think investors should really be paying attention to and kind of watching for?
Yeah, energy's been a big surprise to the upside. Financials, and we saw some M&A activity in the regional banks today. I think they continue to surprise to the upside. Industrials likely come through, and I think healthcare is probably the biggest wild card here. Healthcare is one of the worst performing sectors in the S&P right now, and I think that any results that are coming out to the upside are going to have significant rewards. Away from that, it's very difficult for the Mag 7, 5 of which will report this week, to give us much more than, yes, we continue to spend as much money as we are on compute power to get to that large language model dream of agentic artificial intelligence. I doubt very much we'll get disappointed there, but it's hard to know how much of that is already priced in.
As if we don't have enough going on this week, we're also watching for rate cuts, potential rate cuts, both in the U.S. and Canada happening on Wednesday. What are you watching for there?
Yeah, so it's interesting. This is a Fed that's coming in kind of blind. No U.S. government data, but 85 to 90% chance they're going to cut by 25 basis points. I think that's the right thing to do. But the tough thing for Chair Powell will be to navigate the presser and talk about what it is that they're using or relying upon to make this decision. And clearly, they're focused on their full employment mandate. The labor market is clearly showing signs of weakness, and the unemployment rate will likely tick up again. So that's exactly what he needs to talk about. He needs to say, in the private market, we're seeing weakness in the labor market, and tensions to hire have come in quite a bit. So I think that it's describing how a Fed makes a decision in the absence of government data.
There's also a couple of other things that we're watching that could be moving the markets this week. Constructive election results in Argentina. We were speaking about this morning. What kind of stood out to you there in terms of how that's moving things?
Yeah, a very large bet made by this administration supporting this result and backstopping some of the economic malaise that they were having. This election results sort of proves out that that was probably the right thing to do. I think that takes a lot of pressure off what the U.S. will have to do in terms of aid to Argentina. But I think it takes away one of the larger scares that had a much larger populist candidate won. They would revert back to the same things that most of Latin America and certainly Argentina have fallen into, debt and defaults.
And so just before I wrap up here, correct me if I'm wrong, like we're talking about all these different geopolitical tensions that are happening around the world, lots of trade talk. You think that these earnings reports we're going to be seeing this week are more important than anything else that we're seeing right now in terms of the geopolitical landscape?
100%. The problem is, what's your focus on a daily basis? When we focus on the earnings, that's certainly been a positive for markets, and this will be the busiest week of the earnings reporting season. So if we can take away some of the macro, some of the things like our relationship with Canada, our relationship with China, and focus on the fact that north of 80% of companies are beating and north of 50% are taking their guidance up, I think that's a significant positive and much better than had been anticipated coming into the beginning of this season.
Okay, Art Hogan, Chief Market Strategist at B. Riley Wealth Management. So good to have you today. Thanks so much for joining us.
Thank you. Go Blue Jays.